At BISSAN Wealth Management, we've learned that the single most important factor for success when it comes to investing is human behavior. Markets go up and down. It's how we behave during those times that determines our results. BISSAN started helping families to invest in 2010. Shortly afterward, we began helping families with financial planning. In 2012, the Spanish stock market suffered a sudden 50% drop. Those families BISSAN had helped with financial planning did not sell their investments in those moments of panic. On the other hand, the families that had merely invested with us and not received our help with financial planning often sold near the market's bottom in 2012. The Spanish market soon recovered, but we learned that our preferred clients are those who seek our help with financial planning, not just investment advice. Fortunately, BISSAN's innovative process for financial planning enables us to also help our clients invest well. Here's how. It starts with how we define risk. For those of us in finance, investment risk is usually viewed as volatility. Owning individual stocks is risky because they can suddenly fall 50%. Deposits in a savings account are not risky because they can't. For banks who evaluate how much they've made on their investments for the year on December 31st, using volatility to measure risk makes sense. For the rest of us, it doesn't. Our world doesn't start on January 1st and end December 31st. Our goals and needs have longer time horizons. Some objectives, like retirement, we finance throughout life, so thinking 1 year ahead doesn't do any good. Our risk isn't market volatility, it's not having the money we need to finance life's objectives when we need to. History confirms that a portfolio of global, well-diversified stocks tends to rise in the long run. A portfolio of diversified stocks can be volatile. Its value drops when markets go down, but the risk is reduced as the term of the investment is extended. Selling at the wrong time in the market when it's down is what we need to avoid. To do this, we need to know the payments we anticipate for years into the future, and that's where financial planning comes in. BISSAN developed its own asset allocation program to track and optimize these payments. We call it cash flow risk management, risk minimization based on cash flows. Market results since 1902 show that a portfolio of 80% stocks and 20% bonds would have suffered a market correction greater than 15% only 14 times. In each case, it took less than 5 years to return to maximums and fully recover losses. The only exception was the stock market crash of 1929, which is why, with the help BISSAN's cash flow risk management, 5 years before the date any money is needed, 100% of the required capital is invested safely in a money market. Thanks to our financial planning process, we know future liquidity needs, dates to have money in hand in advance of our needing it. So clients' objectives are shielded safely in the money market 5 years before the date the money is needed, all of which makes the strategy very conservative while at the same time optimizing investment returns because those monies that won't be needed within 5 years are strategically invested in the market. And this innovative approach is just one reason BISSAN Wealth Management is called Spain's Plan Ahead, Sleep Well financial experts.